So today we're going to start out with a story. Your average day, working hard, maybe working from home, and you remember an Amazon purchase that you were looking forward to, and you got to go out to the mailbox to get it. They didn't drop it at your front door as you're walking to your mailbox. You're excited, anticipating the purchase that you made, and then you find another letter in that mailbox that suddenly creates a feeling that is common among these types of letters. And in today's fast-paced, quick response, text messaging and email world, this type of letter can still produce the quickest type of anxiety you might feel. And we're talking through IRS letters today. The 5 most common types of IRS letters that we encounter. We've done an episode on this before for one of the more common ones that we'll cover today, but we wanted to talk through these to give you some, so you can take a breath, right? So you can understand what the letter means and how you can be prepared to respond to it. So this is the Financial Symmetry Show. Chad Smith, Grayson Blazek with you today. And look forward to talking through these ideas. These are some of the questions that we've gotten, some of the letters that we've received, and how we respond to these.
So we figured we could start with 6 tips that are really going to apply to all of these notices. We're going to cover the 5 that we see the most often. Understand that there are hundreds that come from the IRS, but 6 tips that are going to apply to all of them. Number 1, first and foremost, is don't panic. IRS notices can be very routine, very normal. They actually issue millions of these every single year, so don't feel unique if you get one. That said, kind of the beginning of the story here, it's going to create anxiety. It's not fun to get a letter from the IRS. It's not going to give you the warm and fuzzies, but it's important to remember that all of these notices are computer generated. So there's no human issuing them. And so while computers can pick up patterns and everything, they don't understand nuance. So a lot of the times it's maybe just you have to provide some insight on what's going on. 2, read carefully. Make sure you understand the notice and particularly understand the deadline. Most of these come with like a 30 to 60 day window that you're going to need to reply by. So make sure you have that date in mind. Check the notice number. So we're going to cover 5 today, but a quick Google search is going to give you a decent start as to the approach here. Verify accuracy. Respond promptly. Unfortunately, ignoring the notice is not going to make it go away. So make sure you're getting back in touch with them to some extent within that time period. And number 6, honestly, if you want to just stop listening after this one, this is the most important piece of information we're going to share today. Is in a scammy world, in a fraudulent world, don't fall for them. The IRS is only ever going to contact you via postal mail. They're not going to text you. They're not going to call you. They're not going to email you. If you receive any of those posing as the IRS, just delete it. It's not them. It's always going to come postal mail. So most important piece of information there. Unfortunately, I'm sure some of the listeners, I may have gotten a text or something before. But again, be very careful and vigilant when you get these notices.
Yeah, and you may wonder if you've listened to our podcast before. Obviously, we focus on helping people get things in order so they can reach their ideal retirement, right? But as the world has changed and as financial advisors have evolved, there's more services offered from a quality, comprehensive fiduciary fee-only advisor, and this is one of the areas that we help with is tax prep and amended tax returns and helping people respond to these letters because it takes time, right? I mean, you could put it into your choice LLM search engine now and probably get every detail of how you can do these. But, are you going to feel confident that it's done correctly? Do you have the time to do it? Or would you rather sometimes just give it to somebody else that's a professional to handle it? So that's what we're going to talk through it, how you can do it yourself today. But the idea is ultimately you may just want to have somebody help you that does it regularly. And that's the idea of this podcast. So let's jump into the first one. Likely the most common one here, I think, right? I think I may have received one of these before. So let's talk through this.
Yeah, I've received one myself. So this is a CP2000. We did a much more in-depth episode on this a couple years ago that we'll link to it in the show notes. But today, we're keeping it somewhat high level. While the level of anxiety you're going to feel when you get an IRS letter is equivalent, when you actually open the piece of mail, this is likely going to be, of the 5 we covered today, the most worrisome or most anxiety-inducing potentially, as essentially what the CV2000 is trying to illustrate is underreported income from the IRS's perspective. It's going to be likely a pretty involved addressing of the issue you're going to have to go through. And essentially, the IRS, again, believes that income on your return does not match what they received. So keep in mind the W-2s you receive, the 1099s from all the different accounts you have, the IRS is also getting those forms. So if what you filed doesn't match what the IRS received, that computer system is going to flag it. And they're going to issue a notice that says, hey, we think you underreported your income. While it's not technically a bill yet, it is going to outline what the proposed amount of tax due is, any interest, any penalties. And so picture what we see, I think, most often is a client or a taxpayer may forget about a 1099. Let's say there's an outside account that paid some dividends or had capital gains, or it's an employee stock account that they just forgot to provide. It can be pretty material, potentially. It can be small, it can be large, but those dollar amounts can add up really quickly, which again is when you open that piece of mail and you owe $5,000, it's not going to feel good, right, when you take a look at it. But that's where you really want to dig into it. Do you agree with the changes? Does it make sense? If you do agree with it, it's very straightforward. You sign the form they send you, you mail them a check, your account's going to be clean. If you disagree, though, that's where you need to draft a response. So you're going to provide substantiating information, tell them that you don't agree with it and why. And here at Financial Symmetry, we really tried to build a system and a comprehensive and holistic approach that we try our best to prevent these types of things from coming up. So by having a really wide net and a comprehensive understanding of our client situations, we were able to determine, like, where do we anticipate 1099s to come from and other tax forms to come from, so that when we're preparing returns or working with outside accountants, we know what to expect. We know what their income should fall around. And if there's a big gap, like a large amount of income just isn't showing up like we expected it to, we start to dig. We start to take a look and say, what's missing? So I know tax preparation can feel like a chore, but this is the type of thing that it's a lot easier to get in front of and file a correct return from the get-go, as opposed to addressing the notice, understanding that we're human and there's always going to be the chance that something gets missed. But that's really the CP 2000. Something didn't get reported on your return.
In our tax prep process, it is often we find that a client may send over their tax docs, upload them, drop them off. They kind of wait, until they get a lot of the things, but there's still things that are missed constantly, and it could be lost in the mail, right? It's simple as that. But when you get these letters, I've had some of these phone calls, and it's not a laughing matter, but it is interesting that our eyes go straight to that number of due, right? The tax due, or what do I owe from this situation, and how am I going to deal with this, right? It's just an innate feeling that you get from a letter like this. So we're trying to tamper that down a bit.
Yeah, and take a step back.
Yeah,
that 30,000-foot view to breathe. It's going to be okay regardless, and we're going to make sure we're able to get through it and best understand the notice you've received.
So this next one here, again, kind of along the same vein, right? And the letters and the numbers can get really confusing on these types of letters, but it is clearly labeled generally right at the middle of the front page and the top, yeah. So this second one is a CP 14. So let's talk about what this means.
So this is a balance due notice. This is the IRS's first notice saying that you owe them money. So it's going to show unpaid taxes, penalties, and interest. Usually it's sent shortly after your return is processed, whether you didn't pay with the return, you didn't pay the amount that was stated on what you owed, and making sure you pay this quickly. Again, making sure you, of course, agree with what's due. Keep in mind that in the background, if any unpaid tax, interest is accruing, penalties are accruing. So the quicker you pay it, assuming it's correct, the total amount of total tax and interest paid is going to be reduced.
And in this one too, it's probably has increased the amount of these with the interest rate rising over the last, let's say since COVID, right? Where people are getting some underpayment penalty notices as well. And that was because, not timely payments throughout the year potentially, and enough being paid in to reach safe harbor. So that's another conversation that you can have with your financial advisor or accountant, whoever's handling that for you, or if you're doing it yourself, trying to put a process in place to assure that you're reaching that safe harbor amount. So let's move into the third one here. And this is this is one that can, again, scare people on a different level because scammers, fraudsters are getting much more sophisticated in the way that they can target you, and the tax return is no different, right?
That's right. So this is letter 5071C or 4883C, and it's identity verification. So in a more fraudulent, scam-worthy world, the IRS, of course, they want to proceed with caution. And so the IRS, for whatever reason, suspects that potential or possible identity theft or fraud is occurring, and they want to verify that it is in fact you who filed this tax return. Keep in mind that this, again, while it's always important to address these notices quickly, all refunds that may be issued are frozen until the IRS is able to verify your identity. So while it can be potentially frustrating, try to think of the opposite side where it's good. You want to make sure the IRS, of course, is issuing refunds that are appropriate directly to you as opposed to someone who's posing as you. Often it's going to either require online, so through your IRS account, or phone identity verification. Good luck. Unfortunately, on the phone call side, you'll be waiting likely forever. Keep in mind, there's 153 roughly million taxpayers in the U.S. Right now, they only have like 95,000 employees. So it's like 1,600 taxpayers per IRS employee. So like there's a lot of calls coming through. So typically the online verification is going to be the route you have to go. It's most common during refund season. So think like spring, early summer. And then once they're able to verify your identity, they're going to issue that refund. What triggers these? It can be a variety of different reasons. It can be a random check. It can be something just inconsistent year to year from your return. It can be an address update that they flag it. It can be a changing filing status if you had a spouse pass away or you got divorced. Or it could be like truly someone actually filed a return in your name. That unfortunately can happen. It's, it's very kind of time consuming to try to clean up. But again, at the very end of the day, the IRS is just trying to make sure they are issuing refunds to the appropriate taxpayer.
Yeah. And in your research, I know we're going over 5 today, but did you see how many IRS letters there are?
I did. I should have. I'm not sure. It's got to be a lot, over 1,000, I would guess, but that's a shot in the dark.
Well, the reason I said that is because of the way they, code these letters, right? This one here, the next one we're about to go over, it made me think of Star Wars with C-3PO because, right? I mean, you got CP60 and the 4870 letter, right? So a combination of letters and numbers that you're going to be wanting to be aware of here.
Yeah. So sorry, this is very kind of number intensive today, but again, when you receive, if you receive a notice, first place you want to just check quickly is Google. It's going to be the number and kind of a description. So this is the CP60. We removed payments from your account notice. So that starts to become a little bit more clear as to what a CP60 is. But essentially, it means that the IRS has removed a payment or a credit from your account that had previously been applied to it. The IRS kind of later determined that a payment that was applied was done so in error, and they had to remove it. This can kind of commonly happen where, again, the IRS, at the end of the day, it's a system, it's humans, there's always room for error. And so it could potentially be that a payment was made and they applied it to the incorrect tax year. They applied it to the incorrect social security number. One that, and truthfully, as I was doing research for this podcast, this is one that I actually learned about. But let's say you go to make your payment like an e-file, you're e-filing and there's going to be a electronic withdrawal from your account and you keyed in the number wrong, or you had insufficient funds in your checking account when they actually went to draft the payment from your checking account. The IRS reserves the right for a insufficient funds fee. And so then that's going to be notice 4870. And the penalty is actually 2% of the amount that was due. So if you had a really big income year and you owed $10,000, $15,000, $100,000, we're not talking about small dollar amounts here. It can really add up quickly. So the summary of this one is really make sure you are intentional about keying in your bank account information when you're making that payment to the IRS, and make sure that on the date that you select the payment to be drafted, you have funds in the bank account to cover. Again, we all get busy, but during tax preparation season, that can be a pretty costly mistake.
Some of these are things you wouldn't normally think of, right? You're just moving through and processing the normal things. That's like one of the just literally process-oriented things you would do is putting in your bank account number there. But yeah, it could be a significant penalty there. So as we're moving into our fifth one here, maybe I should have saved my Star Wars reference for this one because this one's even closer to C3PO, but it's the CP30A, CP30A.
So this is penalty charge for underpayment of estimated taxes. Depending on the tax return software you're using, most of them are going to calculate interest due. So the summary of this is throughout the year, the IRS wants to make sure you are paying enough into your, like through payroll withholding, estimated tax payments, you're paying enough to where there's not just a big tax bill due at the end of the year. They want their piece of the pie throughout the year to keep your account up to speed. And so if you're not paying enough in, they start to charge interest. It's like it varies quarter to quarter. Right now, as of recording, I think it's either 7 or 8% per year. So it's pretty high on the underpayment interest there. But essentially, the IRS has determined that you did not pay enough in payments throughout the year or withholding. So now they're charging interest. And so when they issue that notice, if it did not get calculated on your return, they're going to issue you a notice after they've processed the return that says, hey, you didn't pay enough in. Here's an interest charge for you to pay. At that point, you can either go ahead and pay it if you agree with it, or a lot of taxpayers, whether it be small business owners or people who get large bonuses or commissions throughout the year, their income can be kind of lumpy. And so you can actually inform the IRS, actually, it's not appropriate to spread my income evenly. It'd be better if we bunched it into these various quarters, and it can actually reduce the interest that you may owe. But again, CP30A is them telling you that you owe some additional interest on top of the tax due.
Yeah, and this is the one I referenced earlier. But interestingly, there's things that come along too that we learned in the process of responding to these or court cases, tax law changes. We just came across one that could potentially be a benefit, right? You want to? I know that wasn't in our notes, but you want to just briefly touch on that possibility?
Yeah. So it's Form 843. There's a court case that just got processed. I'm not sure quite the right word, but it's contentious. Essentially, is a summary here. But it's Kwong versus the U.S. and they have made the determination during the COVID period, so tax returns 2019 through 2022. It's the period that covers the COVID disaster relief era. Kwong, the case made the case that any interest and penalties that were charged by the IRS during that period, so if you filed a return, it showed interest due and you paid it, the Kwong case kind of determined that may not be appropriate. And it's the potential that if you file that Form 843, you have to put a lot of information in, but it's possible that you may get that refunded back to you. They're due by July 10th of 2026 is the end of the statute of limitations on these. And it's kind of just putting your place in line. It may be that these court cases get settled and no refunds are due, but you're just raising your hand saying this may impact me. And by filing that form, they have record of your intention of getting that refund potentially.
Yeah, and we can link a Wall Street Journal article that talks about this idea and kind of walks through it in some detail there that you can look further into that if you're feeling like, if you're not a financial symmetry client, because we're working through some of that now for our clients. But just another example of how we try to look for any and all ways to help you along your financial journey to that ideal retirement. And sometimes it can occur in small, intricate ways that come about when you're not really expecting them. So in summary here,
you take a break, take a step back. Notices are unfortunately a normal part of taxes. It goes to show that taxes and tax planning and tax preparation is a year-round event as opposed to a springtime chore. Certainly make sure you don't ignore these notices when you do receive them. Oftentimes they're pretty quick to resolve. Sometimes they're more time intensive, but you want to be intentional. You want to be diligent. Make sure you understand the notice before taking any action, but at the same time be aware that most of them come with a deadline. So keep good records. make sure you have a good understanding of your tax situation, or you have a good relationship with your accountant or financial advisor, and they're going to be up to speed and abreast and likely able to digest that notice before you, maybe as a layman who doesn't quite understand the nuance that can come with IRS notices.
Can save you time, save you stress by having an advisor that uses checklists and looks for opportunities like this for you. So we try to do our best at that year round, as Grayson expressed. So if you're looking for an advisor, certainly you could reach out, financialsymmetry.com. We could also help you connect with one near you if you are looking for someone local. We also have countless articles, blogs, videos now, podcasts on all kinds of different topics. You can search on our website or on our YouTube channel. And if you would like more information, or if you have a question that you can't find that we have addressed yet, we'd be happy to do that and talk through it, because we love digging into intricacies around your personal finances to help you reach that ideal retirement. So look forward to talking to you again in 2 weeks.